Right, hello everyone. Thanks for joining us in the room today. You know that we got a session on angel investing, so I just want to ask, show of hands, how many of you are angel investors in the room? A few of you. How many wannabe angel investors? And how many are founders who want to meet an angel investor before lunchtime? Okay, there's a few of you. Right, we've got a good mix. Right, well, welcome today. So just to introduce myself, we would have had a screen with our names up there, but my name is Tracey or Perera. I'm one of the board members of London VC Network, who's organising today. We've got Dan, one of the co-founders at the back there, who has worked hard to get today sorted out. I'm also an angel investor, and in my day job that I actually help tech scale-ups on a finance, operations, risk, regulatory and governance perspective. So I'm an Innovate UK scale-up director as well. So I'm joined here today by three brilliant angel investors. So I'm going to just read it off what their names are and what they do. So starting off first with Yimeng Thum, who's at the end there. She is the managing director of Angel Academe, an angel syndicate group that I'm also a member of. That is over 10 years now, isn't it? Founded by Sarah Turner and Simon Hopkins. What's amazing about Angel Academe is that it only invest in female founders. And as you know, that female founders are very under-invested. And also, there's only about 14% of angel investors in 2023 that were women in the UK. So they're doing their part to make sure that improves. So hopefully all of you who are females in the room would want to be able to take part in...
Yeah, and the men.
And the men, yes, that's true. We do have some men angel investors as well, but we're investing in female founders. Now moving on to Shosh Shetty. Let me just get my notes. Yes, so Shosh has, now I'm going to get this right, Thim Ventures. Yes. He's a founder of Thim Ventures. Now, Shosh has got a great background. He's a former investment banker and VC turned angel investor, and they're on a mission to be able to ensure that we've got high C-suite individuals who are investing into founders, and they also invest alongside VC, and they help founders also get VC investment. So there's a lot there that you're doing to ensure growth is happening. And then we've got the legendary Richard Hargreaves, who, when I say legendary, he's been in angel investing for over 3 or 4 decades.
50 years.
50 years, there you go.
Well, not angel investing, but investing.
Investing, and he's co-founder of Endeavour Ventures. He's also serves as the chair of BVCA, who currently right now, Chris is talking downstairs from BVCA, and he's literally written a book about angel investing, so he's got that there today. So good read that you all might need to want to dive into. Right, so today we'll just be having a few questions from myself and then questions from you guys to get them ready. So just to dive in, I want to be able to just get a temperature check from each of you. So just a quick one around how many investments do you have? How many exits or losses have you had personally? But then also from Shosh and Yimeng talking about your actual groups as well. So go for it, Richard.
Well, I've made about 65 angel investments since 2005. 41 of those were exited, most of them lost. I've still got 24, 18 of which are active and likely to make me a profit. Of the realizations I've had, I've turned 2.4 million into 9 million, and I have I've got another 4 million flowed out of some of the companies I'm invested in, which are partially exited, not completely exited. So, and I am actively involved in most of the investments.
Thank you. Shosh?
So yeah, I'll start with Thim and then me personally. So with Thim, we've directly done about 15 angel investments directly. Had one exit, hopefully a second one on the horizon. And actually also the network we've had has done, I think we've got over 300 portfolio angel investments, even just on the wider network for what we do. For myself, I'm probably more on the beginning of my kind of journey personally. So I've done around half a dozen going through, and yeah, still sort of a few years in, so we'll hopefully one of them will be good, but actually I'm probably much better as a investor group lead in terms of the performance of those angel investments versus the ones for myself personally, which I can go through later on.
Thank you, Yimeng.
Cool. So like after exiting my company in 20 Oh, sorry.
I did say we need to put this on YouTube, so let's keep
I got the first S word out. say 11 years ago or whatever. And so 12 deals done. And then out of that, I would say 35% unfortunately have passed away. And the founders have done other things. And then like there is one company that has exited. But like, I mean, I exited the company because they rolled all of the angels up and then a VC took over kind of thing. Yeah, that's it-ish. Angel Academy, they've been around, like we have been around 11 years. The portfolio is 54 strong. Out of that, 4 modest exits, and we've catalyzed about 200 million in further investment from VCs, etc. for the portfolio.
Excellent. Thank you so much. So now the next question is going to be to Richard because he's had the most amount of exits that we heard. So I really want to understand, when you're an angel investor, you're quite a small part of the cap table. So are there any top tips that you have in terms of when you actually are having a chance to exit, how you protect that investment?
Well, I think the first thing is you should not be a single angel investor in a company. You should be in a group, a syndicate. Maybe you're not closely connected. You may have come in through an angel network operation. I would expect to see somebody sitting on that board who is representing the angel group and making sure that they are properly looked after. When VCs come along, they just love to try and walk over angels. I have seen cases where angels have walked over VCs. It's a two-way street, is that? So it's very, very important, I think, to be in a syndicate. You will not normally have any chance to get out of it until everybody gets out. You know, it goes public, rare, or is sold, or goes bust. Occasionally, you'll have the opportunity to take money out when somebody comes along and says, hey, we will buy some shares from people, secondary purchasing. But normally you don't have the opportunity to make your own decision of do I buy or sell. You're either going with the lot or you're stuck. So whatever you do, don't invest money you can't afford to leave in there for a long time and at extreme to lose.
Thank you. That's really important to take that on board. I think all of us are trying to find out whether we can exit, so we need to protect our investments, right? So 1 minute each for all of you, just a quick snappy one, which is, if you could get started again in angel investing, what would you do differently?
What would I do differently? I would absolutely join angel networks. Because there you get presentations on a number of businesses, maybe monthly, whenever it is. The angel organizer will have done some sort of preparatory work on those people and made sure they can present themselves. You will also then hear other people who are more experienced than you challenging the entrepreneurs. Don't feel obliged to invest money. Sit there and watch that flow. Whatever you do, don't go down the pub, meet some nice young kid and make an investment in that young kid's opportunity, because you don't, you need
FOMO.
You need, no, absolutely. You need to be very careful of FOMO. And what I've learned over time is I've done better by focusing into specific areas. In my case, is business to business software, and which includes fintech, not, fruit shops and this and that and the other. You need to have, the more knowledge you've got, the better it is.
Thank you. Sure.
Yeah, I would say, for me, when I did my first one, actually, I put all my disposable income into one investment, which is a big red flag. I would not advise that at all. So, something I tell what I call our LPs or our angels, family office is definitely, there's no smaller ticket sizes, large sample size, and it just, especially when you start, as Richard said, I'd echo the thing about the investor group, so plugging probably Thim or Angel Academy in terms of joining that, because that shared experience around education, also the social, and just from a financial perspective, it really gives you a sense of other expertise, other domain experts you can lean on. But for myself, yeah, I would, if I'd do it again, probably smaller ticket sizes when joining in and doing more of them.
Good advice.
So, like when I first started my angel investing journey, it was right off the back of a really tough founder journey. And I think I got very trigger happy because it was being on the other side and having been through stuff. I wanted to support the founders so much that I was like, yes, okay, let's do this, let's do this, let's do this. So I kind of sprinted and then burnt out. So I think portfolio mindset, think of it as a marathon. We spoke about this a bit earlier, but like keep capital aside because you want to follow on. So yeah, I'll stick
Right,
with that.
Can I
Definitely.
just add a tiny bit to that? You're going to lose, and in angel investing, angels lose in most of the investments. So the good ones have got to pay you well. It also says you must have a portfolio. Do not think of doing less than 10. I don't mean all at once, but over a period of time. Therefore, think how much money have I got? Don't divide it by 10, divide it more like 20 because they will be back for more money. Also remember, I'm sure most of you watched Dragon's Den. The official, there's a report that was produced. Dragon's Den, you'd have got a better result by random selection. In other words, they're bloody awful at it. Why are they bloody awful at it? They're not investors. They're all entrepreneurs.
It's TV, yeah.
And entrepreneurs are different to investors.
Right, now I'm going back to the audience. So thank you for that, everyone. Back to the audience now. How many of you have actually invested through FOMO? How many of you have invested through fear of missing out, the pressure of others going in? Any of you? No. Wow. Oh, one. That's really good. Okay, well, I have to say, I'm a bit like you, Mung, at the beginning when I was investing 5 years ago. I did have a bit of pressure of FOMO. And interestingly, the FCA, so the regulator, the Financial Conduct Authority, did a survey last year, 2024, and this is on all investing. Apparently 51% of under 40-year-olds invested through FOMO, and more than they would have done, within 24 hours. So that's quite scary stats, right? And that's all investing. It's not just angel investing. So I just wanted to ask a question now from all of you. So I'm going to start with Richard and then Shosh and you, Mum. I know we're getting the order of the way you're sitting. But it's one story each, please, of when did you, what kind of red flag or green light did you miss out on and you found out about in hindsight that was surprised you?
I have an investment in a company which is in cyber breach, sort of things Marks and Spencer's had recently. And I actually I was heading a syndicate of investors, and we employed somebody to do due diligence on this company because we didn't know enough about the sector. We completely misread the founder. The founder had built up the business to a reasonable size, and it had fantastic customers like HMRC, McDonald's, the police, fantastic. The founder completely lost the plot. When we got under the bonnet, there was no customer care. He was employing people that were wrong for the role, overpaying them, and he had no proper sales development. So we had to persuade him to step out, to get diluted, bring in a new chief executive. And even though we did some professional due diligence, we did not spot that we had a serious problem.
Anything you would have done differently, having learned that?
Well, either not invested or now, I have to say now, it looks like an extremely attractive investment. But I think we've been lucky in that we brought somebody in. We were just lucky that. And where did that person come from? One of the angels in the syndicate introduced somebody he knew. What you look for with angels, if you're in the center of the company, as I often am, you want them occasionally to be able to say, I can introduce a new person, or I can introduce a customer. It's what's one of the attractions of angels is if you've got, I don't know, 10 or 20 of them, somebody will have something to contribute.
Mm-hmm. Wow, that's a good story, right, Shosh?
Yeah, absolutely. So I think for me, a red flag has been, so actually the first one I did, which I was mentioning, where I put all my disposable income, so it was a painful lesson, was, I think, with that deal, it was slight bit of FOMO, but even though taking time, but there was just this assumption that they had a big VC behind them. A lot of people I knew in terms of angels were getting in, and you just feel actually, most of the due diligence should be done, actually. So even though you do look at it and you are in an environment where there's actually not a lot of data out there at these stages. So, but there are things you can do to, avoid. I think with what happened with this company is that actually there was a lot behind the finances and things which weren't that evident. I also think, another red flag is like co-founder dynamics. I think being able to speak to the the full founding team and not just relying on the CEO founder. That often is one of the biggest reasons why startups do fail later on. So I think for me, actually, if I'd been more diligent, actually, not just saying, okay, a big VC, all these guys are in there, myself actually having conviction for myself and looking behind, seeing, oh, wow, these investor updates look like this is going to the moon. This is a slam dunk, but actually looking at those underlying assumptions, because often what happens is people will sell a story and a narrative early on in angel, but actually to then get, that's a very long journey in terms of when you get to Series A, you actually have had some execution. So to be able to see like those milestones and understand for an angel what does success look like at each stage for this company, and for the founder to be able to articulate that, I think if I'd probed those questions more, I would have probably been able to learn from that mistake in the future. In terms of green flags, I would just say I think I've over-indexed on like markets and limitations on markets, which when I've looked at misses in the past, I think actually the founder's ability to execute has been far more important than the actual market sizing on some of those opportunities. So those would be the two areas for me.
That's really good. You've reminded me that if there's a lot of times where you can be offered a chance to come into angel investing into a founder, but the red flag is if you're not actually able to talk to the founder and the founding team. And I've made that mistake in the past. So I think that's something to take note of and doing your due diligence. Yimeng?
So I think when you're investing as an angel, you're putting your own money on the line. And so it's really important that you examine why you want to do angel investing, because the returns may come, but like you'll see so many things that you might deem as red flags potentially, that it's really important to figure out, are you doing this because you want the return? If so, then maybe a simple pure return kind of thing, maybe you should just put your money somewhere else. But like if you're doing this also to learn, to meet other people who are going to intellectually challenge you, etc., to figure out new industries, to get exposure to stuff like that, to meet cool founders, then potentially this is something. And so like when I speak to a founder and I'm thinking about investing, something that I really look for as a green flag is when they show me vulnerability in some way. So they have to tell me stuff that's not going quite right. If they're telling me a shiny story all of the time, then there's definitely something wrong. Like it's never shiny all the time. And in fact, at the beginning, when you're angel investing, it's usually not shiny at all. And so like how they're telling you this story and like what they're sharing with you is really important. Like if this is a founder or founding team that you could sit down and have a meal with, I think actually that's really important to me too, because like we need to be able to talk about the difficult things early and often-ish. So yeah.
I'm hearing their trust, right?
And if you don't like the people, don't do it because you're stuck with them.
Yes. Trust and a coachable founder, right? Because they're willing to pivot and keep growing the company.
Angel funding.
That's true.
No, you can't you can't just
The coachable thing.
Ignore your investment, write it off. But there's no dividends.
But the coachable thing, like sometimes your ego might get in the way. So like you might think your advice is amazing and why are they not taking your advice and stuff. So like also potentially like check yourself before you wreck them.
That's a good point.
Because, sometimes that can happen. So like.
So thank you. That was really helpful. So one last question before it goes to the audience. What's the top tip for any angel who wants to come into investing or wants to get more deal flow? Now for me, that top tip before I let you go is first, educate yourself. I think the most important thing is to get the education on what you need to do to be an angel investor and how do you need to go through due diligence. It's not as easy as you think because the information is limited. And then I think it's to observe others in groups and to go together. So that's my one.
I largely agree with that. No, I'm not you have to buy my book, but what I did put in there is all my mistakes. I've also put I've never seen anybody publish a track record before either. And it was designed to try and help people avoid some of the mistakes I've made. I mean, for example, there is no correlation, almost no correlation, in my angel history between what I thought was going to be a big success and which were the big successes. Therefore, one of my rules of thumb is invest even amounts in each deal. Because if you really are so good at choosing things, you won't do the bad ones.
If only life was that
If
easy.
you knew which the winners were, you wouldn't do the rest, would you? So you don't. And I agree entirely with Tracey. You need to read what you can, join some groups, go to some of these angel groups where investors are presenting, not with an intention of investing at that point, but just to hear it and make and if you can put a focus into it, it is better. If you can focus on something you do know something about, you say, well, yes, I know that's bullshit. It helps. Or if you're in a group of other angels, some angel can say, I really, really like this. I'm a big expert in that field. I've worked in that field for years. This is something special. That sort of thing is hugely helpful. So network.
Shosh?
Yeah, I would say I think network is the biggest reason. And so, for us, I think just with how we operate, we every month we will look at about maybe 100 deals every month, but we'll pick 3 to 4 that we'll put in front. There's no obligation for people to have to, I think people can make those decisions individually. But the fact that, the way we work, we'll get a lead person who has domain expertise in that area to do the due diligence. And I think that does really help. It's not to say that person is the expert for that company, but I think the shared knowledge, for us, we have 3 pillars around social, education, financial. So we want it to be like a fun, inclusive experience, but also just educational in lots of different areas, because angel investing is not necessarily just about, how can I get the highest ROI? There's so many different factors, from the legal, the SEIS, EIS, different jurisdictions, different, if you're working in different industries, regulatory aspects. So I think joining a group is the fastest way to build that knowledge and comfort. And also it's probably one of the best places for networking, I would say, is an angel group, because you meet such fascinating people of all different walks of life who are who are at the forefront of their technology or their industry. So yeah, with us at Thim, if anyone is interested in angel investing, we have a very informal process. There's a intake form, or you can email me. I'm at shosh@thimvc.com, or find me on LinkedIn. And happy to guide anyone around our processes. It's free to come and see the presentations and the pitch events that we do. So
Thank you. Human?
The answers were so good, I forgot the question.
Top tip for everyone. It's your chance to plug Angel Academy as well.
Oh, plug Angel Academy. So you can join Angel Academy. Everything is on the website. And very recently, we actually launched the first EIS co-fund that will invest in female founders that we are backing as angels. So the fund will follow the network. So the angels have to invest before the fund can invest. But then we give the founders more firepower. So that's kind of cool. But, this is not financial promotion or investment advice. So
That is
you have
true.
to go on
That's
the
the
website and
caveat.
check that out.
Thank you for putting that in, Human. That's important. Right now, over to you. Any questions for the 3 panelists or myself? Go for it. I'll have to come with you the mic, actually, because of the...
Okay, thank you very much for this interesting discussion. My question is for all of you. You mentioned kind of networking and investing in a group is very important. So, of course, you all have very interesting group. But what is a good process for us if we want to join some group or syndicates? How do we choose whether that's a good one for us?
I think you look locally. There's probably somewhere local. I mean, there are angel groups in London. There are angel groups in Oxford, Cambridge. There are about 60 odd or more across the country. Because if you can be in physical meetings like this, it is so much better than if you're trying to do it on the web. So somewhere where you can go and see their presentations and meet the other angels over a cup of coffee or whatever. That's the way to do it. And no reason you can't join more than one group. Normally, you don't pay to join them. The way the group survives is when money is raised, it charges the company a fee, a success fee, for having raised the money. You directly don't get charged, as a general rule.
But not all of them work the same way.
No,
and you've got the UK BAA, which is a good place to go to find the list of angel groups that exist in the UK as well. But go for it, if you've got any other.
No.
Yeah. Sorry, I was just thinking of the question. Yeah, I would just say taste lots of different things. Everyone has different profiles. I'll give you a plug because of the UK. We're up for Investor Group of the Year for the UK BA. So, but yeah, taste different things. So.
And Angel Academy has won that before as well, right? Yeah. So yeah. Any other questions? One there. Sorry, come to you in front as well. Thanks.
Thank you. Thanks, everyone at the top there. Do you have a philosophy about early stage investment? That's obviously where the higher the risk is, possibly the greater the reward, but what is your criteria for early investment? Do you ever invest early?
In my case, I almost entirely invest early, but I do not invest. Now, whenever I give these rules, I always break them occasionally. I don't invest when there's no revenue. Because if there's no revenue, if there is some revenue, however relatively small it is, the product works, somebody's bought it, and they bought it at a price. That reduces, it still leaves you very risky, but it reduces the risk a great deal. I was describing earlier how I've got investment in a company that makes machines, or has them made, that makes corrugated cardboard. And they've got an absolutely disruptive technology, which is using cold glue to glue it together rather than steam glue. Massive energy savings. People actually put money into that entrepreneur's company when it was just a wild idea. I put money in when they had the first order, which was 1.7 million euros. Even so, it was risky, but for the people who put the money in initially, wow. And if you do too much of that, you lose 90% of the time. Because you've got, angel investing is, you're taking risk, you're fundamentally taking risk, including the high levels of inflexibility you've got. You don't know liquidity. You must try and learn how to control the risks as you go down the track.
That's true, but it's all each to their own, really. It's a personal choice as to whether you go when they've got traction or when they haven't. I personally do when they have traction. It depends what kind of businesses you're invested in. In Angel Academy, we look at a lot of life science, bioscience. They have got a long route to market, to commercialise. Sometimes you are taking the punt on what you really truly believe in. Like if there's something that's curing cancer, some people want to back that. So that's where it's a personal choice. Have you got anything else to add? Both of you?
Yeah, sure. I mean, where we typically have operated is, I think it's one of the riskiest asset classes out there, angel investors. So, we come in below 10 million valuation. So I think everything we do has a very high risk profile as part of that. There are obviously with the criteria and the knowledge that we try to skew that to help add as much value and skew the odds as much as we can in our favor. But I think alluding to the earlier point is as much as in terms of the sample size and the quantity of trying to diversify that risk by doing as many as possible. And as Richard, I would say evenly distribute it is the best way. But yeah, it's one of the riskiest asset classes out there.
Your investment thesis will evolve as you invest and as you get more data and stuff like that. And so I think when you are investing, for me personally, I don't invest in solo founders. I don't invest in companies with just one founder, because I think it makes more sense when you have a co-founding team that can run further. Like you're looking for examples or evidence that like they're thinking about scaling. And so like all of the signals that to me signal that they want to go big and they don't want to go home, like those are the things I look for.
Thank you so much. I'm sorry about, there was one question in the front, but we'll have to let that go, I'm afraid, because got the red flag up and we got the next session joining. So I just wanted to say, so my key wrap up here today is to say thank you for all of you to join in and thank you for the panel. Now, I think key message is know what kind of angel you are and also understand what kind of angel their founders want. Some of them want mentors and coaches to get involved, like Richard, you say you're doing with some of yours. Some of them just want you to throw money at them, throw your black book at them, and then just leave them alone to get on with it. So I think that's very key. But we all know that we need to invest wisely and look at all the different risk factors. It is the most riskiest asset class compared to crypto. So you've got to think about that. And also you need to think that how did the unicorns start? They start with a really great a founding team that are executing like crazy, but also angels that decide to say yes. So that's a really key thing. I'm here around all day today, so if you want to come and say hello, it'd be great, and great to meet you all, especially if you've got portfolio companies and scale-ups that want to help, because I'm around. And also come to speak to Yumeng and Shosh about their groups, and then Richard, I think it's about reading his book. I think we can all learn from that. So huge thank you to everyone, and thank you for hopefully you have a great time the rest of the day, and come and join us at the after party afterwards. Thank you.